Hello everyone, welcome to the Ichimoku.co daily market review for the trading day ending Thursday, May 1st. Firstly to the S&P 500, and here we have a continuation of the trend to the upside, but a doji type candle, a candle of indecision, and that does suggest that there is a very real possibility of a change of trend to the downside. Now confirmation of that would be the market taking out the low, making a lower high and a lower low, and if the market does trade lower, we have potentially very strong support at the 1867 level, with the Tenkan-sen trading around that area. We do have a bullish market in all three time frames, and I suggest that if this market does come off, we could see the market find support down here and the buyers come back into the market and attempt to build momentum for a potential breakout up above this area to test the important 1897 major high. But if we look at the recent trading here, we've seen some strong white body candles with the buyers attempting to build momentum, and then that momentum has been lost with this indecisive doji candle. So some doubt about whether we actually will reach that target at 1897. But there is very solid support down below the 1867 level as well, extending down to the Kijun-sen at around 1856. Now importantly, looking at the Fibonacci extension, and here we see the market interacting once again at the 50% level, and this indecisiveness at the 50% level does suggest that there is a very real possibility of a change of trend, so we will be looking for confirmation of that. And the Fibonacci retracement is at the 100% level. We've tested beyond there and failed to close above there on an indecisive candle, also strengthening the proposition that there could be a change of trend. Moving to gold futures, and here we've seen a continuation of the trend to the downside, but for the fourth consecutive trading day, even though the trend is continuing down, we have the sellers not closing with control of the market, and we can see that we've closed roughly around the midpoint level as we have for the past three consecutive trading days, and that suggests that even though the sellers are strong, they're not totally committed to trading this market lower. At the end of each day they tend to be losing commitment. It's probably a bit of profit taking. We see the buyers coming into the market. Now we do have a bearish market in all three time frames by trading below each of the Ichimoku indicators, and the problem here for the sellers is that we have some strong resistance in a zone extending from this previous swing low down to about the 1266 level, so wouldn't surprise to see the buyers come in here and change the trend to the upside, but we still could see this market falling on these rather indecisive candles, although I must admit with them being black body candles, we do have the sellers building net momentum, and we're not seeing that from the buyers at the moment. Now if we do see the buyers come into this market and trade above the Tenkan-sen, there is potential for very strong resistance around the 1300 level. We have the Kijun-sen trading around that level as well, so we could see the market rally to that area and then see the sellers come in once again. Moving to light sweet crude oil, and here we have a market that's neutral in the longer term time frame but trading within the cloud and bearish in the medium and fast term time frames. We have seen follow through after the breakout down below the round number 100 level, but on an indecisive candle where neither side is closed with control, but we do still have a black body to this candle, and that suggests that the sellers have maintained momentum to the downside in net terms. The worrying factor here is the Chica span is within the corresponding price action, so it's confirming this neutrality that we're seeing in the longer term time frame. So we will be looking for a breakout in either direction to confirm a big picture view of this market. Now the problem here is that the 100 level may provide very strong resistance, so a breakout may not be likely, and if the trend does continue, we do have the bottom of the cloud around the 98 level, and then just below there the $98 previous support and resistance. So a market that's trying to make its mind up, and we do need to be patient and wait for resolution outside of the cloud and outside of the close by support and resistance. Moving to wheat futures, and here we have a change of trend today, a candle with a lower high and a lower low, and as suggested, that 722, which was a previous major level of resistance, has seen price rejection from it. Now it doesn't mean that we will necessarily see as strong a sell-off as we have seen previously, but it does suggest that the buyers will need to be very strong to trade above the 722 level. Above there we do have the 740 level as another level, so if the buyers can be strong enough to trade up above there, they could quickly trade to 740. But the thing to look at here is that the 700 round number level is held as support for this current candle, whereas it was previously resistance, then support, then resistance, and now acting as support for this candle. So it will be crucial for this market moving forward. Now the black body candle does suggest that momentum has shifted to the sellers, and if we look at the previous upswing, all of those candles have had a white body. Even the small doji had a slight white body, and it really said something about the strength of the buyers in that upswing. The sellers here have taken out the previous two white body candles in one go, and it suggests that this is probably a reaction to the strength of the buyers here, where they've really disappeared, and the sellers have attempted to come into this market as payback for all of this very strong uptrending action. Now there is a possibility of the market trading lower, but the sellers will need to be very strong to trade through that 700 level. But I don't like the way that they were rejected from the 700 area. They lost commitment in a substantial way, evidenced by the large shadow. Now if they do sell down through that 700 level, we do have the Kijun-sen and Tenkan-sen trading around the 693 to 690 level, so very strong support just below there as well. But a bullish market in all three time frames, and let's be on the lookout for the buyers to potentially come in around this 700 level. But if the market does rally, then 716 and 722 may provide an area where the buyers could once again lose commitment. Moving to the US 30-year bonds, and here we see a very important breakout up above the 135 level. And once price action was able to get through this zone of resistance and then to see it hold as support around that 134 level, it suggested that the buyers had found some new strength and suggested potential for a test to higher levels. Now that candle before today's candle suggested that the buyers were attempting to build some decent momentum. It was a candle where the buyers had won the trading day in net terms. They made substantial net progress and they closed with control, and today we've seen that breakout with the buyers closing with control, not strong control. And the thing to watch here for is that the buyers did lose some commitment as they were testing almost to that 136 level, so it will be a very important level. Now if the buyers can close in a bullish way up above 136, we could quickly see them trading up to the 136.31 area. We do have a bullish market in all three time frames now, and the Chica span here is confirming that bullishness, and it does suggest that if we do see that breakout, we will see continued higher prices. If the market comes off, I suggest that 135 will be a level that we should see some strong support, and then perhaps see buyers coming back into the market. Moving to the S&P futures on the hourly charts, and here for the previous day's trading we saw the market open up above each of the Ichimoku indicators, trade down to the middle point level, failing to close down below there. So this shows how important the pivot point levels can be. At the moment, as this market has opened, we are opening above each of the Ichimoku indicators with a bullish market. The middle pivot point level is close by at 1877, and should provide some strong support. We also have the Kijun-sen and Tenkan-sen trading around that area. Now I suggest if we do see a bearish close down below each of these indicators in the middle pivot point level, we could quickly see the market trading down to the cloud, and the cloud is around 1873 at the moment. We also have the first pivot point support level within the cloud, and then as we move further into the trading day, it actually moves across the bottom of the cloud, so exceptionally strong support around that area down around 1872. Now if the buyers can go on with this bullish trading activity above the Ichimoku indicators, we have a target here at the first pivot point resistance level at 1884. So really what we need to do is watch how the market reacts to these levels throughout the trading day.